All right. Morning. It's about 6:33 on Wall Street. 3 hours before trading begins. Welcome to QuantBox Live. It's time to get your macro on. This is where we uncover the best fundamental opportunities across the global markets. Very cool. Our AI-driven analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning, and seasonality. And now, including market sentiment in real time. And to get that, we measure 6 different things. But anyways, all of this uncovers the best fundamental opportunities. Very cool. My name is Wayne McDonald. I am the founder of QuantBox. I'm also a Harvard-educated economist. I'd like to thank the current owner of QuantBox.com, who made the wonderful offer of $250,000 to sell QuantBox.com to us. I'm like, let me think about it. No. What an idiot. Anyways, I said, well, I'm going to stick my $250 offer. But anywho, thank you. So anyways, swing on by quantbox.co. So I'm a macroeconomic trend trader. I always have been, always will be. I start with the macroeconomic idea of why money is moving around the world, and then I use technical analysis to confirm and deny, enter and exit my trades. Yeah, but for all of that, it's nice to know the fundamentals, things like seasonality, like economic data, like technical trends, like the news, so on and so forth. But we also have now sentiment. Now, look at this. This is cool. Right here, it shows retail is 51.49. Mixed market in that scenario, but clearly a downward trend. Smart Money Tracker comes out every Friday. That's your Commitment to Traders report issued by the Commodities Futures Trading Commission to show you large institutional positioning in the market required by law. The only thing is they give you an Excel spreadsheet. It's really hard to read. QuantBox makes it pretty and easy for you. Yeah, so on and so forth. Anyways, if you're on YouTube, you're watching this several hours delayed, why don't you swing on by and give QuantBox a test? It's $8 for your trial, gives you a week. You can poke around, look around, look at all the pretty colors and go, oh my God, there's so much information here. I actually don't know how to use all this information. Well, guess what? Included in the $8 trial is a 16-hour macroeconomics training course and another training course on how to use QuantBox so that you understand statistical analysis. Cool. It's well worth it. Swing on by. You're welcome to join us. With that being said, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money cannot afford to lose. Jim says, awesome day trading discussion yesterday. Yeah, none of it recorded. Yay. Cool. So it's yours. It's yours. Yeah. Remember it. If you don't remember it, it never happened. So then if you liked it, you got to write it down. Anywho, yeah, let's just go. Let's go. Logging in. You got some news today, huh? Oh, look at this. Look at this. Cool. Here's something going on here. All right. It won't let me in. So I go back and I'm like, I select this. This is my QuantBox email for this account. I go to switch account and it still won't let me in. Oh no, Wayne, it's broken. Oh no, dude, it's not broken. Did you read this? Yeah, no, you didn't. Anyways, switch your browser session. I'm logged into the wrong one. Okay. So let's try it again. QuantBox.co, log in, go to Pro, not a problem. Got to be logged into the right browser session. And you know that strange, quirky browser that you use that protects you from the government and from Chinese spies and Russian hackers and blocks all ads and reads the mind of small children? It doesn't work with the Google Cloud. Okay, so yeah, just go ahead and use Chrome like everybody else for at least this one. Yeah. Anywho, by the way, did you hear that guy was making death threats to Biden? So the Secret Service showed up and they had a firefight. Oh my God. Anyways, that's what you want Grandpa to be doing on on a Tuesday afternoon. Oh, or Wednesday afternoon. Oh my God. He was 75 and just in a full on gun battle and they shot him dead. Oh my goodness. Denise says, "Oh, you do have it. Yeah, sure. That would be helpful. Thank you." Jim's like, didn't end well. Well, not for him, but very often that's the plan anyways. You ever watch the movie Seven? Oh, what an amazing ending that is. All right. So what do we know right away? Flat. Good. All right, don't lose a lot of money today. If you see it, you're making it up. In fact, scatterplot says what? Negative integer. You're calculating the slope of the mean, right? With your mind. Are you getting better at that? Yeah. So what does it say? Everything is off. Most things are off. It's not great. Bitcoin's down, Nasdaq's down, S&P 500 down, Dow is down, oil is down a bit probably, but from a very high price. Yield in the 10-year T-note flat. S&P 500 under 45. Remember, we had a target at 44.44. When do I get to do happy dance? Happy feet dance. Getting pretty close, huh? Euro dollar above 110. But everything else is down. Why is that up? Like, it doesn't make any sense. That's what the scatter plot says. Be careful. Bitcoin down, euro dollar up, yields are flat. What is going on? Look at the daily bias. You know what QuantBox recommends right now for today? Like, not all day. No, like right now. Do you know what it says? Nothing. But I tell you, if you go looking for something, you'll find something to do. You'll throw money down on an ill-conceived idea in not just mediocre, but actually poor market conditions. And what do you think the probability of success is? High or low? Probably not high. So maybe let's be smarter than that, huh? I mean, a lot of people look up to us, especially small children, because we're taller than them. So we got to be adult. Take a look at a longer term. Guess what's happening? Short term, medium term, and longer term. Nothing. Jackson says, why has the gold price been so far off QB? Well, I don't know. Let's take a look. I haven't actually pulled it up in a very long time. Is there something? Is it not reporting? No, it's slightly bearish. No, it's slightly bearish. It seems right. I'm bearish. Retail's heavily long because they're worried about inflation. What they don't understand is we're in a disinflationary period. and China's in deflation now. And retail's long because they think that's the rule. They read it in a book where a YouTube guru said, "Oh, inflation's high, buy gold." But the current price, yeah. Oh, and is that not the current price? Is that what the issue is? There was a data feed. Is there a data feed error? That's what you're saying? Oh, okay. Oh, so we're through it. Okay. So, yeah, I complained to the developers yesterday and they said it updates every 15 minutes or something. Well, if it's off, it's off. Okay. Okay, that's cool. I'll roll with that. Let me go back. All right, cool. I mean, yeah. So it's just a data feed issue. What? Let me get rid of that, brother. Yeah, it's just a data feed issue. So cool. So when I say data feed issue, like if I go back to gold, the thing that's off is literally just this number being pulled off of a table somewhere. And that table, for whatever reason, is not getting the update. So, anyways, but everything else is legit. Uh, cool. So, 1922. I see what you're saying. Oh, okay. Yeah. And what's our target on this one? Yeah, 1900 basically, huh? So we got pretty gosh darn close overnight. I have this actually because of today's high. The projection is 1899 and a half. So if I said 1900, I apologize. I should be more professional. It's 50 cents lower than that. I mean, come on, right? Yeah, neat, neat. So so far so good. We started this journey way up high, though. Of course, basically rejection at 2000 on our way to 1900. Okay, cool. And as we get approach lower and lower, we get closer and closer to support. So we have news today, right, in America? Anybody knows? Does anybody know what the news is? CPI. Okay, cool. Is it going to be high or low? Well, there's headline, there's core, and there's super core. Headline down, core flat. No one's going to even talk about super core anymore. That's old news. People got bored of it. They're just like, just tell me up or down, buy or sell. So too many layers of complexity. And does it even matter? Who cares? Who cares? Who's going to use this number today? The CPI number. Who's going to use it? Why does it even matter? We should just skip it. Anybody? Why should we skip it? Like what why is it a big deal? Or how about why is it not a big deal? CPI headline inflation? Like, Wayne, isn't that everything that's going on? Well, do you trade news or do you trade fundamentals? And then if you trade fundamentals, because remember, news is just volatility. Professionals hate volatility. Amateurs love it. Okay, we're professionals. I'm like, I don't care. So CPI comes out. Will it move the market? Yeah, dumb money. But why do we look? JP says because the Fed looks at, looks at PCE, but it doesn't matter. Whatever. Inflation's inflation, right? Now, PCE is more accurate. That is true. So let's go with that thought. The Fed. We care about the Fed. We trade fundamentals. We don't trade news. We trade trends. But why do we trade the trends? And economic data, which is fundamental analysis. Why do we do that? To discern what the Fed's going to do. So let's get really simple now. And the media might miss this. So you have to listen to Uncle Wayne and not anybody else, except your priest, your lawyer, your bartender, and maybe your spouse. I emphasize maybe. All right. So how about this? Let's do food for thought. When does CPI come out generally? What number day of the month? Does it come out the 5th, the 15th, the 25th, the 35th? What day does it typically come out of the month? Any given month, just generally. Just you should know this. You shouldn't Google it. But if you got to Google it, Google it. What time of the month do we get CPI? Hey Siri, when does CPI come out? I should be careful because it probably responds. Everyone's phone just went off. Around the 15th of the month, typically on a Wednesday. All right, that's not today, but whatever. And that's typical. When's the Fed meeting next month? The 20th. Yeah. So are they going to talk about next month's CPI or this month's CPI? They're like, well, forget the recent data. Let's go back to August and let's discuss that again. I mean, it's irrelevant, isn't it? The Fed will have new data by the time they get to their Fed meeting. So today, I would propose is generally irrelevant. Okay. It'll create some news. People will freak out, but remember, institutional investors they're not even in the office. This is kids in the sandbox throwing sand. Yeah. Okay. So, anywho, keep that in mind. Just throw some things out there to think about. Headlines coming down, right? Yeah, sure. What about core? Probably starting to flatten out. The trend is much bearish, generally speaking, because like let's think general terms so we understand where all this data comes from. Are prices going up in China or are prices going down in China? Down. They're actually not even disinflationary. They are now deflationary. They have negative CPI. Wow. Okay. How many people here buy stuff from China? Let's say Christmas time. You're going to buy your kids or your grandkids a Christmas gift. Any chance that some of it was manufactured or assembled in China? Yeah, probably a pretty good chance, huh? Prices are down. It's going to be a good Christmas. Yeah, you got to feed the entitlement machine. Yeah, feed it. You can buy your grandkids more for the same dollar. They get even more. Yeah, they'll love you extra. We all know that. The more you spend, the more they love you. Proven fact. Yep. So, anyways, prices there will come down. Okay, so that's interesting. Just follow Chinese PPI for that. Remember, Chinese PPI is what? Negative 4.1. Yeah. Got to know these things to impress, pretty people. Then what? What's the thing that is going to crash the stock market next year if it crashes? Not that it will, but if it does. What's the thing that's going to blow the house of cards down? Well, it could be commercial real estate, but you know what? It doesn't have to be because banks could just, take it on the chin too. And the bank and the real estate owner can kind of renegotiate and, I don't know, work it out and say, let's come back in 5 years when things stabilize. It's a 30-year relationship. It might be a forever relationship. So let's get through the 5 years, right? And we all know interest rates will be lower in 5 years. So they figure it out. It doesn't have to go down bad. But remember what I said a couple of months ago when we're at 65? If we can get back up above 70 and 75, that we're probably on our way to 100 or more. That's going to be inflationary. So we'll get to an election, maybe it'll be very interesting, where um, prices are high, but the government will tell you that inflation is low. And they're like, no, 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 Jim, that's just the cost of the food you're eating and just the cost of the gasoline going in your Ford F-150. But we don't count that. And you get like Mike Pence. Did you see the ad? Apparently, he got a lot of flack of him filling his gas tank of his Ford F-150, and he's telling you how the administration has done so poorly with their energy policies that now we all have higher fuel prices. It's a good idea, but the thing is, he pulls the thing off the pump. He doesn't select any fuel grade, and then he sticks it into the truck, and he doesn't pull the trigger. And people are laughing at him like, dude, this dude's never driven a truck or even filled his own gas in his entire life. He doesn't even know how to do it, right? And so, anyways, it's one of those great ads where it probably will work great. It's going viral because apparently he doesn't know how to pump gas. But anyways, it is going to be an issue, according to Mike Pence, that the energy policy is going to backfire. And of course, there won't be anything to do about it this time. You can't suck fuel out of the strategic petroleum reserve because we've already tapped that. So it worked to get through the midterm elections. And by the way, it sounds like I'm like political, like I sound like a Republican talk show host, but no, we know it's a political ploy. It's strategic. It's actually kind of smart. It's dangerous, but if you want to get through those midterms, that was the play to do. And they did it. But now they're going to have to go up to a federal election, and you can't play that card twice. Yeah. Now Trump could use a get out of jail free card, but Biden's already played his ace up the sleeve. So we all need cards, right? So, anyways, so yeah, so I think that inflation of food and energy comes back, well, then core's dead, right? Well, no, you have to go back to core and say, "Oh, well, the pain you feel isn't real, right, America?" America's gonna like, yeah. I've seen wine prices just in the last month. Some bottles of wine have gone up 30 to 50%. Okay. Yeah, the new normal. Well, yeah. So anyways, I would focus on that moving forward. Headline CPI has definitely come down. Most of that is the energy equation. I think when we get to core today, it'll be quite stable because if you remember non-farm payrolls and you look at the wage subcomponent, um, it's moderating and it's not negative. It's not falling. Americans have jobs. Americans are getting paid. Americans have money. The issue right now is they're spending money they don't have. Credit card debt's going up. Savings is zero again. Um, but nonetheless, have we seen a deterioration? Are Americans losing jobs? No. Are their salaries coming down? No. Are they spending? They're spending every penny and more. So that doesn't sound disinflationary, does it? Not yet. And my guess is we're going to load the boat up with cheap Chinese products for Christmas. We're going to jack up the credit cards max, which sucks because you couldn't get a higher interest rate on your credit card than now. You'll pay the highest rate that we've seen in 20 years. So it's going to be an interesting Christmas. Okay. And if all that consumer spending because of all that money stays around for a while, that's demand for energy, isn't it? Yeah. And so there you go. And then you find yourself June of next year. So 1 year from now, um, we'll have a problem of like $5 a gallon gasoline in America. Maybe I'm just wild hypotheses here. That's going to be a problem, right? Stock market generally comes down before the election. So that could be a real negative narrative because the stock market in that July, August, September, and even October period um, will be that we won't know who's going to win. We don't know what party. We may not even know if Biden's even running. So by then it would be like we don't know the party, we don't know the candidates. Someone's going to be new. Their policies will be new. All this uncertainty. What are they going to do about inflation if that's the big thing? And we won't know, and there'll be a lot of uncertainty. So we can go through a lot of behavioral finance, and I can predict what the stock market's going to do in advance. Does QuantBox have that? No, but there are pieces of it that we can use in that thought process. So anyway, so gold almost on target. Mm, 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 mm. Guess since we got it coming out, we can look at it one more time. Loading, loading, loading. Mm, mm. Come on, Google. So, anyways, yeah, I'm thinking, do I agree with this? 3.5 versus 3.2? I guess so. Yeah. I don't think I don't think it's going to be that bad. How about 3.3 or 3.2? I think it's going to jump next month because we know oil is up. But I don't know if it's counted yet. I don't know to what degree is it all counted yet. Do you guys know how much oil is up over the last 30 days? 16%. But how much of that is in the CPI report? All of it? Some of it? Half of it? So I don't know if we're going to fully capture it until next month. Maybe it's the September CPI that fully captures that rally. And in particular, if it keeps going, like I said, and Goldman Sachs said it even before me, that oil would go to 100. So if we're up there at 90 in September, okay, will that be reflected in a 3.5? Yeah, it'd be interesting if September pops to 3.8 and core goes with energy prices, it's more like 5, be very interesting. Be very interesting. And suddenly, this headline is more like 4 instead of 3, and you have 2 up months. What would that make the Fed do? Well, everyone that says it's off, you remember 83% of people say the Fed is done. And I'm like, oh yeah, I understand that. They're wrong, of course, but I understand that's what they think. That's okay. That's okay. That's what's being priced in. Great. I'm really happy for them. So if we get to September with two growing CPIs, are we really going to be paused? Is the Fed really going to be done? I don't mean that they're going to raise, but will they seriously consider another rate hike that they've already told us they're likely to do? Yeah, probably. Yeah. And we go right back to that October raise. We've already talked about all of this. So the market will have to shift. So that's, I think, the importance of today's CPI number. Mm. Yeah, just look at some of these numbers, huh? Amazing. Yeah, what's going on in Australia and New Zealand? Wow, it's just cray cray. Although I think Australia, because those numbers come out quarterly, I think they're going to drop quite a bit. Where was it? The 6%. That's got to be too high now. Yeah, just clearly moving along, just moving along on time too, like just beautiful. Although look how early it actually took off. Mm. But we double bottomed in that period, right? Yield on the 10-year. I'm hedged on this one, but I believe I'm better off if this is coming down. Technically, if calculate the slope of the mean over 14 days, it's clearly a positive integer and still going back up. I'd like for this to come down. Okay, cool. And 70% of institutional investors agree with me. That's cool. Mhm. 2 hours and 2 minutes. Cool. That's neat. All right. So I'll go right back to where we were and just remind you that it looks like almost everything is out of position. So it might be because risk is coming off before the headline CPI today. I only think it's volatility. I don't know if it has any meaning at all. Okay. But if you're if the numbers come out, let's just say inflation's down across the board, it's just more signs the Fed is done, the worst is over, recession averted. Um, Everything up here will probably fall, and everything down here will probably rise. Okay. And those are opportunities. So like maybe you end up buying a dip on the S&P 500 if the numbers come out and the market interprets the numbers. Remember, what's right or wrong, good or bad is all irrelevant. It's the market interpretation. Okay. So if suddenly we're here's my drawing tool, epic. Okay. If the market interpretation of this is up, okay, then that dip we had in the S&P 500 is your opportunity. Cool. Looks like I just had this just slightly too low, huh? We've been watching this for 2 weeks now, this price level. We just never quite got there. Like, got close, just refuses. Anybody surprised that in the first and second week of August, we've found consolidation? Isn't it lovely that we can plan these things? I love it. Love it that we can plan these things because otherwise it does feel like a random walk down Wall Street, doesn't it? But if you're like, no, the conditions are about to change, we're going to go into consolidation. Sweet. And it does, you're like, cool. Helps you make decisions. So, anyways, I appreciate the seasonality of QuantBox. Thank you, QuantBox. So, more rabbit stew for a while. I think you're going to get volatility today. That's cool. Everybody makes money if the stock market's going up. That's all I can say. Um, we're cautious about it, but remember, bears sound smart, bulls make money. So we got to be both, don't we? So if the market's going to go up, the market's going to go up. Okay. Seasonality says in the next 5 weeks, I'll probably be heavily long. But when? Today? Well, today exists in the next 5 weeks. Is it tomorrow? Is it next week? Is it the week after? All those are plausibilities. So I got to keep my eyes on the prize. But ultimately, I think today is going to be noise. Where does it get gold price from? Our data provider on for candlestick data. Yep. A different source than tradeplans.ai. Yeah. The issue is it isn't right. It could be CFD. I don't recall. Is it a CFD? Is it the spot price? Is it a US futures contract? Very often it's just some generic price, but there are multiple prices for gold. Yeah. So, but they're all like correlated almost perfectly one. So, yeah. So if you're looking at your broker and you're like, man, mine is $2.50 higher. Yeah, that's going to be a difference of European futures contract, American futures contract, spot price. And there could also maybe that feed has a 15-minute delay versus something else. I don't think so. But all these things can happen with a data provider. But I mean, QuantBox is quite great. Like when you look at these things like this that we're looking at now, this is like as close to real time as possible, as technically possible. So that's really cool. Um, but QuantBox isn't necessarily designed to get you into a gold trade within 3 minutes of accuracy and 30 cents of within 30 cents of price. It's not a trading platform, right? So it's an analytical tool, and of course a data aggregator, right? So it's let's just say close enough, more than good enough for government work. Yeah, but not a trading platform. Yeah. Oh, but we can look at it, and gold is up a little bit today. But QuantBox says economically it should probably be a little bearish. So we know that it's just slightly bearish, -2, but it's slightly up today, which is +2. Okay. And that's now. So that's way more than enough data. Could be like by the end of the day, that might be a short. See, that's the thing. You see everything over here. That's why it's bullish and unexpected. Everything here could be a short opportunity later today. I have to emphasize what this means. What size? Uh, hang on. Oh, that's weird. What is this? I don't have a number 2. That's weird. Oh, that's right. I've broken it up. All right. So this is one screen, actually. I only have one screen, but it's that big. So I use software to break my screen into 2, but I only have one screen. So it's really a strange monitor. Yeah. Now, I think on youtube.com/FX Oops. Yeah. By the way, Windows updated once again, and now my browsers don't work on my split screen. Like, dude, Microsoft works all day to ruin things. All right. Anyways, I think it's here. No. This is the trading desk one. Hang on, videos. Is this the right one? You're familiar with this 4K trading setup. This. Hey guys, I'm working on a new project, and I thought this first started doing that. People said, you know, an 18-inch laptop. So monitors up to the same. So I needed something big, but it couldn't be too. By 9, I don't know, keeps you from getting headaches and stuff like that. Rate and stuff is really good. So it's trying to get the Samsung will tell 9, and it's 32:9 super ultra wide curved. So that's the one I got. Good job, huh? All right, so after reading the instructions, the screen is in the box, the neck is to the screen, the base is to the neck. Okay, so yes, anyways, I don't know if you can see that. It's curved, so I can do my webinar stuff over here. I can do the. Here's my kitchen. I got a little office kitchen, which is nice. Yeah, so you'll have to watch that. I don't remember the size though. 47 or something. This is where I sit and I code with just a couple of fingers. Isn't that amazing? So that's what I look at with just a couple of fingers. Are really crisp. But now check this out. Yeah, I just lowered the whole thing and raised the whole thing with just a couple of fingers. Isn't that amazing? Anyways, yeah, there you go. Hey guys, I know you're familiar with this. Hey guys, 4K I know you're familiar with this 4K trading. You wouldn't. I don't know. Sorry. 42.9. Could be. It's not the smaller one, it's the bigger one. But yeah, you know, we're traders, we like toys, right? So what I ended up doing was with software. Like I said, with software, I ended up breaking it into 2. So Windows treats them like 2 different monitors, even though it's one monitor. Yeah. So essentially dual screen. Cool. Well, that's it. Be careful with the CPI today. Ultimately, follow the Chinese PPI. And generally, inflation is going to be down. So it's going to be a good Christmas. And it's going to get, and we're going to jack up our credit card debt like crazy this year. And then we're going to get crushed next year with inflation on energy and maybe food because we're spending money we don't have now. Guess what? That'll be inflation in the future. Huh. Well, it's not the best thing to do with money. Remember, if you invest money, you get a return. And savings equals investment. So if you save it under your bed, everyone gets poor and everybody stays poor. If instead you put your money in the economy by investing it, let's say you real estate or the stock market or the bond market, or you just keep it in the bank so that the banks solve the asymmetric information challenge for you on your behalf. Cool. Then you can use the solo growth model and see how that increases productivity as long as your investment is higher than your depreciation. Cool. And you get a return and the economy expands and grows. Things get bad when you don't invest your money. You put it under your bed. It doesn't go in the economy, but you also don't spend it. So nobody benefits. You don't get a return on investment. Where the worst is, no, not the worst. The next thing is you just buy a bunch of crap with your money and nothing happens. Well, at least you give it to somebody else and they might pay their rent with it. Okay, that's half decent, but there's no return. And the worst case scenario, you ain't got no money, but you still want to be rich. Yeah. People are signing up for cars, pretty cars. And they're like, oh, I got $1,000 a month. I can pay that for a car. I'm like, dude, did you see the interest rate? They're like, I don't know nothing about interest rates. So they know they have $1,000 a month, but they don't understand they're paying 12% for a car loan. What? Okay. Yeah. So, anyways, it's a topsy turvy world. Save your money, invest your money, be smart, be wise, and yeah, there you go. The whole everyone will win if that happens. Cool. Anyways, peace on earth. May the pips be with you. May our profits be above average. Talk to you soon. I'm sure. Cheers. Boop, boop, boop.